This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's Thursday morning. Rima, is it? Thursday morning,
Thursday morning, and the weekend feels a lot closer now that, Thursday morning is here.
Well, I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, morning.
Hi, good morning. By the way, you guys are active on Twitter. There is a new rival, Instagram's Threads. Have you downloaded the app?
Absolutely.
I have downloaded the app. I have an account. And,
Already?
I posted on Twitter. So, I mean, it's... by the way, the reason is very simple. I joined Twitter, in 2017 or something, but I actually only started posting in 2020. Actually regularly, using it during COVID times. So I was told that I was very late. I was really
So you
late.
wanted to be first this time.
So I don't know.
Yeah.
But it's going to be the same. I don't know. You post the same content on Twitter, on Threads, or other platforms as well. At least that's my plan.
Yeah, even I'm guessing. So I downloaded it this morning and I'm on it. But I think I'll take a little time. Maybe over the weekend I'll see how exactly things go. But Twitter is really powerful. Everyone is tracking it.
You've got a blue tick also.
I've got a blue tick as well. I'm no bones about it.
Yeah.
The day it was announced, I said in that week itself I went and got the blue tick. So to each their own. I wanted it, and everyone is following it so much. So might as well cost you 6,000-7,000 rupees.
Well, it's a lot of fun following the Threads thread on Twitter.
I have to download it still.
Okay, all right. Well, let's quickly tell you how things are lined up as we begin another trading session, right? So yesterday, the market pulled up. What else? It refuses to stay down. We had another positive close, not a single day of even a slightly lower close. It was up 10 points. That's about it. For bulk of the session, the market was down between 15, 20, 25 points. And then starting 3 o'clock, actually, last 30 minutes of trade, we saw a big perk up. And we closed marginally higher. So 700 points in 6 sessions. Although yesterday was flat, but it's 700 plus points now in 6 sessions and counting. So it's been pretty remarkable. Overnight, US markets came back after a holiday, but it's been very, very quiet. So volumes were thin, relatively muted action, largely positioning related moves is what one picks up. S&P down a little bit, the Nasdaq down about 0.18%, the Russell 2000 down about 1.25% as well. So not very much by way of a directional cue with this set of close. We had the FOMC minutes, and I would say that there is no real new information about the timing of further rate increases, right? Data dependence, etc., but doesn't tell you what something which has not already been said or the market does not already know. Odds of a hike in July, of course, have gone up quite a bit with all the data we've got. The 10-year went up, the yield 8 basis points. We are back close to about 4%. The dollar index, which has been treading water just under the 103 level, is back above the 103 by a little bit, not much. So that gets us to the levels that you need to watch for here for today's session. So yesterday, actually day before yesterday, and we put this out yesterday, the Nifty had formed what was a doji pattern, which is basically the opening and the closing of the same, which means that the market is not undecided where it wants to go. It's kind of right in the center. Yesterday, we had another price pattern, which is basically an inside bar. It's a pretty simple pattern, which basically means that the high and the low yesterday were within the high and the low of the day before yesterday's session. They were within the candle of the prior day. And that, again, in a way, is basically an indication of a market which is perhaps quietening down a little bit. Again, kind of emphasizes the fact that after the run-up, maybe it does want to take a bit of a breather, if not more. Indecision, basically, after what it wants to do, whether the pace will be similar, and that kind of raises the doubt that maybe we are in for some, maybe a day or two of a break at least, right? If not a little bit of a pullback, which would not be a bad thing, with what I said yesterday as well. So support of the Nifty comes in at about 19,300. This is nothing but the low that we made day before yesterday. At the upside level would be about 19,494 if we were to come to that. On the Bank Nifty, we had a bit of a negative close. The pressure largely came in from the HDFC twins. On the way down, 44,600 perhaps is the level that could be used as a bit of a stop. Again, that's the low that we saw day before yesterday. The recent high of 45,655 perhaps is the upside level, which comes into play. 44,600 is not the low from day before yesterday. It is a 50% retracement to the 5-day rally that we saw from the 26th to the high day before yesterday. Well, the broader market is still going strong. The mid-caps and small caps rallied 0.5%, 0.75%, and we are seeing very varied single stock action. So there is no real pullback there. We had a bit of a break day before yesterday, the last 2 sessions, but yesterday things came right back. SGX, the gift city, beg your pardon, is indicating once again, like yesterday, a flattish kind of a start. Maybe one more session, just consolidating and spending some time, not doing big outrageous things like 150, 200 points in a single day like we've had over the past 5 or 6 days. Rima.
Aye, but the gift Nifty is just down 24 points.
Yeah.
But look at the rest of the Asian markets. They're sinking. Japanese market's down 1%. Hang Seng is down close to about 1%. The Taiwanese market has a cut of close to about 0.8%. Even yesterday, Asian markets were deeply in the red, but the Indian markets held out firm, managed to close up with marginal gains. But once again, today, Asia is weak. Can the Indian markets continue to hold firm? Just on the point about the Federal Reserve and the FOMC minutes, the House is still very divided on how many more rate hikes we're going to see. There are 18 members. 16 of them, out of the projections which were issued post the FOMC minutes, 16 out of the 18 members said we could see one more rate hike of 25 basis points, while 12 out of the 18 members said 2 more hikes are possible. So there's still some division within the members and the committee about whether we're going to see 1 or 2 more rate hikes as things currently stand. The next Fed meeting is on the 25th and 26th of July. Before that, there are 2 key economic indicators which are very important. One is the July employment data on Friday, and the second one is the inflation print. Flows continue, particularly from the FIIs. Yesterday, the FIIs bought 1,600 crore in the cash market, while the DII sold about 440 crore. And today, this morning, again, the flows could be skewed because of a large deal we're expecting in Piramal. It's also the weekly expiry for the Nifty and the Nifty Bank. And just want to quickly point out that even as the Nifty closed just shy of the 19,400 mark, the recent highs yesterday and day before are about 20-30 points from where we currently stand.
Well, that's right, Rima. Can the bears fight back on weekly expiry day? You have the dollar index that's a little bit stronger. You have crude that's higher as well. And the FI as well, they're taking it very easy. They're aggressively long on this index. But yesterday what they did was they wrote calls, and quite aggressively as well. And that's after a while we're seeing something like that. The Nifty Bank had a bit of an off day because of the HDFC twins. But, that ended at the 20-day MA, which is a crucial mark out there. Let's run you through what the FIs did first in the FNO market. As Rima said, they've been showing us the big money in the cash market. And in the futures and options space, well, they added close to around 10 longs for every 1 short positioning on, which takes the long positioning now to around 1.5 lakh contracts. That's a gross long position. I've not deducted the short positioning from there, but that's quite aggressive on the long side, and that's the highest I've seen in the recent past. In terms of the long-short ratio, well, that's moved to around 72% odd, which again is on the higher side. On the index option space, well, they unwound some long positions out there, but they wrote 83,000 calls, and they wrote close to around 4 calls for every 1 put. That's aggressive call writing that we're seeing, and we're seeing that after a while. Moving to the options data, well, the 19,450 call, well, that got written in yesterday's trading session, close to around 20 lakh shares getting added there. But on the downside as well, we did see some bit of action at around the 19,350 put. So just plugging in the numbers, support comes in at around 19,310. I know the last couple of days we have dipped and the dip has got bought into. So today, given the kind of cues we're seeing, we're likely to see some bit of a dip. Let's see whether or not it's bought into, but otherwise that's a support zone. On the upside, going by the options data, the 19,500, 19,480 odd, that'll be a bit of a resistance. Now, yesterday the FIs wrote calls, and it appears the 45,300 call actually on the Nifty Bank, that was getting written. 20 lakh shares getting added there. The premium is around 100 rupees odd. It appears that 45,500, 45,600 odd, that could be a near-term hurdle on the upside for the Nifty Bank. And on the downside, you're looking at 2 levels, so 20 as well as the 50 DMA. You'll want that to get defended. Now, the GIFT Nifty is suggesting a bit of a downtake to kickstart trade. The big question is, the cues are in place, but can the bears fight back? And given that it's weekly expiry, well, we'll expect a volatile second half of trade. So let's see how this goes.
Okay, well, that's the setup as we see it. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you from, updates from across the globe. We have Richard Harris of Port Shelter Investment Management joining us. And a little later after that, we'll have the top stocks, which our research team will get to you. And at 8:30 this morning, we have Siddharth Khemka of Motilal Oswal Financial Services. with things that he wants to bet on, and of course reacting to a lot of the news flow which has come in after close yesterday.
On the equities, Rhythm Desai of Morgan Stanley says a strong macro and improving corporate fundamentals present upside risk to stocks, while global growth, liquidity, relative valuations and a strong sentiment may present challenges. He adds the bid on shares may persist as the markets start to price in a favorable election outcome in 2024.
Okay, we've got one more equity call. This is from G.V. Giri of IIFL, who says, given the recent softening in commodity prices and many being significantly below the FY23 average, they've analyzed the impact on earnings. Keeping aside obvious casualties like metals, most sectors will have margin benefits. Commodity prices should stay weak as demand outlook globally is not strong due to sharp rate increases by central banks in advanced economies and weak reopening in China. IIFL expects revenue estimates to be cut during FY24, but the impact will be offset by margin benefits. Top picks include Bharti Airtel, NTPC, SBI Life, HDFC Bank, Bank of Baroda, Sun Pharma and Indigo.
Some money market views then on the rupee. Parul Mittal Sinha of Standard Chartered Bank says the USD INR continues to trade range-bound last week as the positive impact of higher FPI inflows was countered by a slightly stronger dollar and consistent dollar purchases by PSU Bank. She expects the rupee to trade in a range of 81.85 to 82.35 against the dollar next week, with the dollar and oil prices being the key forex drivers.
On bonds, we've got Parul Mittal Sinha of Standard Chartered Bank, who says that domestic yields saw upward pressure last week, tracking global rates and repricing of rate hike expectations in the US on the back of stronger data. Further up moves seen in global yields after June FOMC minutes show a divide on pause. For next week, she sees the Indian benchmark 10-year yield trade between 7.05 and 7.15% range. June CPI data due on the 12th of July is in focus, and Stan Chart estimates a rise in CPI to 4.8% from 4.25% in May, especially on the spike in food prices. Global yields will also stay a key market driver.
Well, we've got a lot of stock-specific action that we're tracking for you, and we'll get to that in just a bit from now. But let's run you through the list for the time being. Ujjivan Small Finance Bank, you have DCB Bank, Tata Park, KEC, Solara Active Pharma, Bombay Dine, Prestige Estates. Well, they are stocks on the back of positive news flow. On the flip side, you have Marico, Adani Wilmar, and Post Motors that could be reacting to negative news flow overnight.
All right. Well, Richard Harris is now joining us, Chief Executive at Port Shelter Investment Management. Richard, good to have you with us here. Thank you very much. It's always a pleasure seeing you early morning. How are things looking to you, Richard? Many are calling for a bit of a turn now, especially in the US after the very strong run that we've had. Here in India, I'm not sure whether the market rally in the US has really helped us at the margin. Maybe it's not hurt us because the market here has been at record highs, perhaps the first big market to be at new all-time highs, that has been India this year. But especially, let's just start with the US. Are we sort of at a juncture where we see a bit of a pullback?
Well, that's interesting. It's not a particularly technical analysis, but if you see what happened last year, 2022, basically January the 2nd, beginning of the quarter, we had a big fall, pullback in global markets that carried on till pretty well the beginning of October, beginning of fourth quarter last year. We've now had a 9-month bull market on global markets, culminating in a bit of a shoot off, almost a real bull market caused by what I'm calling the AI bubble. And you can see that also in the Indian index too, that maybe in the last month or so, markets have actually appreciated quite substantially. So I said it's not particularly sophisticated analysis, but the question must remain that did the end of June form a point for a reversal? And of course, markets have been a bit sluggish since then. Or do we have to wait till September? But it certainly looks as if these quarterly ends are proving to be quite important, even though they're psychological in terms of seeing market reversals.
Richard, you spoke about the surge in AI stocks as a bubble. Is the AI bubble going to burst according to you?
Well, it's nothing like the dot-com bubble or maybe the subprime bubble that we saw in 2007, but I think it's a bubble nevertheless, especially those stocks that have been associated with AI. And those talk about mainly the big US techs and chip makers like Nvidia, but I think that's also spilled over into other markets, and you can see it in India as well. This big run-up sort of in the last, you can see on the chart there, the last month from May to June, there'd been a significant run-up there. Now, the worry, of course, is that the AI, it's something in the future. It's known to be inconsistent and inaccurate most of the time. It will develop, but will take some time to develop. And I think we've seen a bit of a rally on the back of that that will probably peter out. That might actually form the start, perhaps, of a rather sluggish period in the markets.
Hi, Richard. Good morning, Richard. You've been a fan of the Indian markets. You've mentioned in the past as well, we are better placed than most others. But now we're close to around 20 times, on a forward earnings basis. Do you think there is scope for us to re-rate from year on, given the kind of hot money that we're seeing, given the kind of political stability as well as the earnings growth? Do you think that Indian markets can further re-rate and deserve a higher multiple?
Well, I think it's still very much dependent on global markets. India is not going to buck the overall trend of the global markets. It's been a strong outperformer for various reasons. The economy has kind of held up. It's benefited from outsourcing. It may well benefit from warmer relations between the US and India. So it certainly outperformed in that extent. And I suspect that will continue, but it will only continue relative to the rest of the world. So if it turns out that the US tech companies start taking a bath in the next 2 months, it's going to be very difficult for India to buck that trend. So, of course, we'll see lower prices. I think the market has moved much more into line compared with other markets, say, over the last quarter. We've seen NASDAQ up 30%. We've seen Europe, the Dow, and pretty well India up about 16% in the last quarter. So it's moving more in line in that extent. And I think the concern is that it probably won't be defensive if the market comes back. But, to a certain extent, you've got to think, what are you going to keep investing in? And equity investors obviously have to take the rough with the smooth.
Richard, typically the market latches on to a reason, right? When it sees a bit of a pullback. Rarely it is just purely based on valuation. It needs something else. And usually it is something which we can't see right now. We can discuss all the risks, but what eventually will cause it will be something which we don't discuss, which we won't discuss right now at least. What do you think, Richard? Does it need a catalyst, or you think it's just, maybe some time correction will do it?
Yes, well, there are known events, known unknowns, and unknown events. And events are very important. I think, Nigel's point about PE is very important. But, PE is extended all over the world at the moment. And you have to wonder, especially in the light of the amount of liquidity that's been put in the market, whether we can really look at relative PEs. How good an indicator is it? Because after all, it is relative. Maybe 20 times is the right PE for this particular time of the market. I've been looking a lot at narratives recently in connection with my PhD. I've been looking at a lot of events and what they may happen. And I think that, what we're seeing with a very recent narrative, and I'm talking about over the last 2 or 3 days, is we have seen concern about PMI weakness in China. We have seen concern about services levels coming off, about service slightly weakening in the US and in Europe. That is a concern because obviously high interest rates eventually are going to bite. High inflation is eventually going to hit the bottom line of some companies. And that may well lead to unemployment and recession. Usually that story needs some kind of event to trigger it. You're quite right. And because it's an unknown, I couldn't imagine what that might be.
Should we, next time we address you, should we say Dr. Harris?
Yes, please. It's taken me 5 years.
You completed it recently?
Just within touching distance, yes.
Oh, wow. Many congratulations. And what is the topic, Richard?
Well, I did it on a new topic called narrative finance, which is really looking at narratives in the market, trying to digitize near-term narratives in order to be able to maybe improve our forecasts a little bit for what's looking at in the future. As Nigel was saying, P's are pretty high. In a way, we need some other indicators to narrow our probabilities of what we think might happen. And that's really where narrative might be the next step.
Well, narrative financing, that seems like an apt title for a book as well, maybe in the future. But congratulations. Thank you. Thank you very much.
Looking for a publisher.
Oh, you're looking for a... There you go. Well, all the best, Richard. It's great speaking with you, as always. And maybe we actually can do a program on that very topic. Sounds very interesting. Thanks very much for joining us once again. So, Richard Harris with his thoughts on the market. We'll take a very quick commercial break here. We'll come back and we will focus on stocks that you need to watch. Our research team will be standing by with a top list of 10 stocks for the day.
Welcome back. Let's drill it down to the top stocks that CNBC-TV18 is watching this morning. We've got our team with us. Good morning, guys and girls. Mangalam, let me start with you. Marico and Adani Wilmar.
Well, for Marico, it was a quarter which was marred by a fair amount of one-offs, as a result of which the company's volume suffered this time around. So they are expecting only low single-digit volume this time around, with a low single-digit decline in their overall revenues. In fact, the company said the anticipated rural demand hasn't seen an uptick yet. However, there are a couple of silver linings. The first one is sharp expansion in their margins will lead to double-digit profit growth in the quarter. And secondly, because it was a quarter marred by one-offs, the next quarter, the company expects it to be a lot better than this quarter itself. So expect the stock to open in the red, but thereafter, dips may be bought for those who are looking at the next couple of quarters and not just the near term. As far as Adani Wilmar is concerned, can't say the same about that because their volumes grew by about 25%, but that doesn't count for much because of the sharp decline that we've seen in edible oil prices over the last 1 year, as a result of which their revenues have declined by 15%. Add to that, the company was sitting on high-cost inventory, as a result of which there will be an impact on the profitability as well. So that would be a large part of their business, which is weak. What is the strong part of their business is the food business, which has seen a 30% plus growth in their revenues. But then again, that's a small part which is growing fast.
Okay. All right, Mangalam, thanks very much for that. Well, let's get you more updates then, right? I mean, Ujjivan Small Finance Bank and DCB Bank. Abhishek is here with that. Abhishek, morning.
Morning, Prashant. So it's good to see that Ujjivan Small Finance Bank's tenure of the book is coming back to where normalcy is. Last quarter, it was on elevated side. This time around, the disbursals are up 22% YOY and down about 12% sequentially. The disbursal to AUM ratio, or how much of the disbursals goes into AUM, that is at now 24% versus 37% in the previous quarter. Loans are up 30.6% YOY and about 5.24% sequentially. Deposit momentum is healthy at 44.5% YOY and a 4.5% growth on a sequential basis. CASA has dipped a bit. It has declined by 2.9% quarter on quarter, and CASA ratio has declined both YOY and quarter on quarter. Asset quality has improved. Gross NPA ratio is down almost 20 basis points on a sequential basis, and portfolio at risk that has remained flat on a sequential basis at 3.8%. Coming on to DCB Bank, RBI has approved Tata Mutual Fund to have a holding up to 7.5% in the bank. This current holding of Tata Mutual Fund in DCB Bank is about 4.95%. So approval is valid for a period of 1 year, and RBI has advised Tata Mutual Fund not to increase it beyond 7.5%. Back to you.
Okay, thank you very much for that. Let's go across to Surbhi for some more stocks which are in the news.
So I'm looking out for Bombay Dyeing. Now there are business standards reports that suggest that they may sell the Worli land parcel at 5,000 crores valuation. A Japanese company has leading the race amongst all the bidders. The land has a development potential of 2 million square feet for commercial purposes. Also watching out for Force Motors. They came up with the June sales data. The production is down 16% for the month of June. The domestic sales are up 13%, but the export sales are down 10%. And lastly, Prestige Estates. The company and its wholly owned subsidiary, Exora Business Parks, has entered into a JV agreement with WS Industries. This is to develop IT-enabled service parks on a 6.53-acre property in Chennai.
Surbhi, thank you very much for that. Keep 3 more stocks on your radar. The first one is Tata Power, where the company has won an order worth 1,744 crore rupees from Chhattisgarh State Power Distribution. It's to implement a smart metering project. That clearly appears to be the big theme, smart meters. KEC International has won a 1,000 crore order, and Solara Active Pharma, where the board has approved a 450 crore fundraise via a rights issue. So keep your eye on these stocks.
All right, then here's a quick recap of all the stocks that we just covered. Stocks with positive news flow into the likes of Ujjivan Small Finance Bank, DCB Bank, Tata Power, KEC, Solara Active Pharma, Bombay Dyeing and Prestige Estates. While stocks with negative news flow, will they include Marico, Adani Wilmar and Force Motors as well. Okay, all right. So those are all the top stocks that you need to track. But there are a lot of brokerage reports as well that came in earlier today. Ekta joins us to run us through that list. Ekta?
Thanks for that. Well, I'll start with CLSC on Bajaj Auto, where they have an outperform rating and a target price of 4659. According to them, the Triumph launch looks positive. They remain cautious on increasing competitive intensity in the premium motorcycle segment. Morgan Stanley has written on Maruti overweight rating with a target of 11164. Maruti has already received 6,000 bookings for Invicto. Mix and the market share improvement keeps them overweight. Citi on Godrej Consumer buy rating, target price of 1175. They believe the company is on the right track. They expect performance improvement across segments. Jeffries on Godrej Properties buy rating, target price has been raised to 1850. The company's share of pre-sales should rise to over 75%. And lastly, Macquarie has written on Marico, outperform rating, target price of 620. Q1 business update points to a weaker than expected low single-digit sales decline, but the better margin commentary drives a 4% upgrade to their FY24, 25 and 26 EPS.
All right, Ekta, thanks very much for that. So some brokerage calls, and we'll get you more as we go along. We'll take a quick commercial break here. Siddharth Khemka, Head of Retail Research at Motilal Oswal Financial Services, joins in for some fundamental stock analysis. A little later, we'll have Abhishek Gaushande, Deputy Vice President, Research at Sharekhan, to discuss the developments in the premium motorcycle segment with, Aisha, Bajaj, Hero, all there in the fray. And of course, the launch of Invicto from Maruti as well. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, plenty of stocks to discuss. We just ran you through the list, and we have with us Siddhartha Kempka, the head retail researcher at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Good morning. Well, let's focus on the banking pack first. We've got a lot of bank, quarterly updates that come in. The big boy HDFC, well, the street was a little bit disappointed with the merged entities numbers because it was lower than what other banks have reported, and also in comparison to their own high standards. What's your view in terms of the banking pack? What stood out from all the banking quarterly numbers that we got?
Yeah, very good morning, Nigel. Thanks for having me on your show. It's always a pleasure. So if you look at the overall banking sector, that has been one sector which has been leading from the front in terms of the earnings delivery. And the same is expected for Q1 as well. We have seen some of the pre-quarterly business updates that have started coming in for some of the private banks, some of the NBFCs, and all suggest that credit growth continues to remain strong. We had the overall RBI data for the system credit growth in June above 15%. So definitely from the last years of 17-18% of credit growth on a high base, it is normalizing. For the current financial year, we are expecting 13% credit growth for the system. The asset quality is likely to remain stable with not much of impact on the asset quality front. NPAs are likely to remain stable, so that should drive earnings. So if you look at overall, our expectation from the quarter is that the banking sector could show a 54% earnings growth in Q1, and that would be largely driven by the PSUs, which would report a growth of in excess of 90%. For the full year, we expect the banking sector to remain pretty steady with more than 20% growth, and that should lead to the sector stock performance outperforming the industry because of the growth that they continue to report. Coming specifically to HDFC, yes, there was slight miss in terms of the numbers that they reported. I think about 4-5% below our expectation and as well as street expectation. But the long-term structural story for HDFC remains pretty strong with the merger taking effect, and the efficiencies or the synergy benefits would start playing out this year itself. So within the overall banking space, as I said, PSUs would lead from the front, and for the first time, we are giving out Bank of Baroda as our preferred pick within the PSU space after having kept SBI as our pick for the last several quarters. And within the private banking space, ICICI and HDFC are our two preferred bets within the overall banking space.
Siddharth, morning. Motherson Sumi, Samvardhan Motherson made a big acquisition. They've acquired Honda's subsidiary Yachiyo's four-wheeler business. The pricing appears to be attractive with this acquisition. They also foray into new segments like sunroofs. Motherson's, Sumi, Samvardhan Motherson Sumi, SAML as it's called, is a stock that you like. What have you all made of this acquisition, and can it re-rate the stock?
Yeah, Rima, good morning. So I think, yes, this is a pretty decent acquisition that they have made, and rightly so in an effort to diversify their customer base, the business model. So Samvardhan is something that we have been liking a lot for quite some time. The company is seeing good recovery in its key segments, especially if you look at the improvement in the supply chain for some of the OEMs. And if you look at specifically from Samvardhan's perspective, the company is now taking good strides. The acquisition is at a fair valuation, and we expect it to kind of to be EPS accretive going forward. So overall, I think that's a good acquisition and will help the company diversify. We believe that Motherson will benefit from the industry-wide recovery. There's a strong execution of order book, and with the raw material costs receding, that should also help. So overall, the stock trades at a fair valuation of about 20 times FY24 and 17 times FY25, which gives us a good upside from current level. So we have a target price of 102 on Samvardhan Motherson.
Siddharth, do stay on. We want to just talk about the battle which is taking place in the biking space and even in the auto space, where there has been a very big launch from Maruti Suzuki. Yesterday, the shares hit a record high, crossed that 10,000 mark briefly, as the company has entered the premium multi-purpose vehicle, MPV segment as it's called, with the launch of Invicto. This is Maruti's most expensive car in India, priced at over 20 lakh rupees, almost inching towards 25 lakh rupees. My colleague Danish spoke to the MD of Maruti India and asked him about their plans in this segment.
Now we are getting into the much higher premium segment with these products. We believe that the market situation in India is evolving, day by day, year by year, day by day, and this segment is surely will increase in the years to come. We are so much surprised to receive more than 6,000 bookings already in our hand. This is much bigger than our anticipation. We do not think that the car is overly priced. When you see the products, the features, the specification and the performance, I think this car was that price level. And we are quite sure that customer will understand and accept. So we'd like to go beyond 50% for the MPV segment. So we will see. If we are lucky, maybe we can go up.
All right, staying with the auto space then, Bajaj Auto launched two 400cc bikes, that's Speed and Scrambler, in partnership with Triumph yesterday. My colleague Parikshit spoke to Rajiv Bajaj and said the Triumph partnership is about affordable aspiration and promised at least one new bike from this tie-up every year. Let's hear him out.
The reason for the success of our partnership with KTM, which saw KTM go from 65,000 motorcycles a year in 2007 to becoming the #1 premium motorcycle in the world by volume now at over 300,000 motorcycles a year, is because we did not comply with this implicit assumption that you can either buy something that's affordable or something that is aspirational. What KTM Bajaj brought to the table, and if I may say so, then motivated TVS, BMW and even Bajaj Triumph to come together, was to be able to offer affordable inspiration, let's say, or affordable aspiration to that customer. As far as Royal Enfield is concerned, I say to people that in the US, when the bank robber Willie Sutton was asked, why do you rob the bank? And he said quite simply, because that's where the money is. So I would say to you that today between Bajaj, TVS, Enfield and Hero, Bajaj has about 50% share of the profit of the industry, but there are two profit pools, large profit pools outside of this, which have been elusive. One is the Splendor and one is the Royal Enfield. So I think with this brand, the consumer will give us the license to compete in the space that Royal Enfield has done so exceedingly well in. I mean, hats off to Siddharth, what he's achieved. And hopefully we can make some impact there. We have something very special in the works within this fiscal year, towards the end of it, hopefully, for those who absolutely love the Pulsar. The next big thing with the Pulsar. So we've done, I think, a reasonable job with the Triumphs.
Okay, that's always very interesting to hear Rajiv Bajaj outlining the vision with a Triumph and the pricing coming through yesterday. Abhishek Gaushande is joining us, Deputy Vice President, Research at Sharekhan. Thanks very much for joining us, Abhishek. Good morning. Prashant here. What did you make of it? The launch, the product, the competition, what it would do to Hero, but more importantly to Eicher, where the leadership lies at this stage. Go on.
Yes, you're right that currently, if you see that above 25cc segment, it has been Eicher Motors monopoly. But post this launch, we may see a serious competition would come up for the Royal Enfield. And if you see that for last 10-12 years, Royal Enfield has actually created this particular category in the Indian market. And now the Harley and the Triumphs are coming into the market when market has been mature. and there is an availability of a large pool of replacement demand. So now the customers would have even the existing customers of the Royal Enfield would have an option to either go for a Royal Enfield or its competitors. Second point which I would like to hear is that anecdotally we have seen that whenever an aspirational brand came with an affordable pricing, the market response it's in a very positive way. We have seen the same case in the same thing in the case of the Evoque when JLR has launched the Evoque, or even in the last year when Royal Enfield has launched a Hunter at an affordable pricing, its volume has grown up. So this is the thing which we are looking in this space, that this affordable priced aspirational brands would expand this particular category, and side by side it would take some kind of a market share from Royal Enfield. Though initially it would not be seen in the way because the volumes would ramp up slowly, but 2-3 years down the line, things would change materially.
Abhishek, do you think Royal Enfield may look to cut the prices of its product to make it more attractive in light of this increasing competition?
Historically, we haven't seen such kind of a thing from the Royal Enfield, but you can take this in a way that now it would have a limited room to play on the pricing wise. As in the last 1 to 2 years, it has increased prices, but now it would be conscious on increasing the prices. So some kind of a price cap would come in the industry. And second thing is that now the down trading would happen. We may see some more product launches in the between Hunter to this Triumph or a Harley kind of a period. So bunch of the products would come up, and at every price point you have a particular product to play on. And in the past, whatever be the competition come to Royal Enfield, that was not from such a strong players. This time, these two global players are coming out on the shoulders of the mass players in the Indian market. So competition may go serious from here.
All right. Hi, Abhishek. Good morning. Abhishek, what kind of volumes are you factoring in from Bajaj Triumph? How do they ramp up, say, in FY24? If you could give us a number, as well as in the next year, that's FY25, a monthly number if you're factoring in?
Material thing, I think we would to see at this point of a time that what kind of a ramp up would happen, as they are themselves are considering a capacity of 5,000 units. So yes. I think that it will take time to ramp up. But when they ramp up the volumes, then we may see, and if the products would be accepted, then they can expand it. At this point of a time, we may think we are not very much conscious on the volume per se. We just want to see that how this product would get establishment, because this is not a product for the domestic market only. It would be in the export market also. So if you have been following Eicher Motors, then Eicher Motors is currently focusing on the export market to tap this mid-size motorcycle market. But now what is happening that its competitors like Triumph and this Harley are coming out with an affordable motorcycle in the affordable segment. So the competition would be global from here now in this mid-size motorcycle segment. So Eicher has to counter these things on both the sides. In its own market, that is in India, side by side the market which it has been targeting, that's the export market.
How are the valuations stacked up for Bajaj, Eicher and Hero Moto? And how would it compare with historical levels?
See, historically, Eicher has been trading at a significant premium to this mass market players, and there are the reasons that it has a monopoly in the market and this premium segment. Second is delivering highest EBITDA margin and has a brand pool. But now if you see that we may see a kind of a re-rating in this mass market players, because they are plugging the gaps in their portfolio, and that may at some point of a time would reflect in their valuations. On the case of Eicher Motors, it has to perform well, because in last 1 year, if you see that now that Hunter is contributing roughly 16% to its total volumes, but on the ground check and all these things, we are seeing more demand for a Hunter kind of a product than its ex-Hunter portfolio. So some kind of action requires at this point of a time to justify higher valuations, and has to deliver performance on the operating margin percent. Although now company is focusing more on the profit than mere margin, but margin is something which the street has been looking for from Eicher Motors.
Okay, well, we'll leave it there. Abhishek, thank you very much for joining us. It's a pleasure. And that's a topic which I think markets are very interested in. And we'll see that play out this morning. Yesterday, when that pricing came out, the Bajaj stock went up sharply. And the Eicher stock went down sharply. Hero, of course, also added on to the gains from the prior day. So we'll get more on this as we go along. We'll take a quick commercial break here. Anuj comes in with how he's seeing the markets. On the other side, our technical and F&O guests also join in with specific trading ideas. Stay with us. Okay, welcome back. There's 11 minutes to go for the pre-open session. Anuj is here with how he's seeing things this morning. Anuj, good morning.
Morning, Prashant and Nigel. Well, I'm starting with the chart of the day today, and it's a very interesting chart that will come up for you. This is nothing basically, just the FIs on index futures and the long short positions. Now, what is very interesting is that this is where the bottom was made on the market, and this is when the net short contracts were in excess of 1 lakh contracts, right? This is where the market had peaked out. Now we're about to take that out and exceed almost 1 lakh positions in terms of net long. So obviously the market's overbought, but you know what? The market can remain overbought for a long period. And in terms of percentage, we bottomed out at 91% short. Who's to say we can't go to 91% long? So that I think is a fascinating chart. The other chart is about the Nifty highs and lows for last 3 days. And of course, this is the other chart which is slightly worrisome because the market's now way past all the moving averages. So in that sense, the market's overbought and it's a bit of a parabola, a bit of a melt up, whatever you want to call it. But that's just a bit of a sign that I thought I'll just put on board. It doesn't mean that the market stops here, but the market's extremely overbought. That's one point. Now talking about the near-term action, on the Nifty, we had an inside day yesterday, the highs and lows both within previous days, but we have been making higher lows. That's a comforting sign. And almost same is the case with the Bank Nifty, where again we made an inside bar, but the lows have been higher than the last couple of days. So in that sense, that gives you the basic range to work with for today. The other thing I'm focusing on is the big stocks, and there was return of some of the erstwhile leaders like ICICI Bank, 600 crores of delivery buying yesterday in ICICI Bank, and fresh high after 1 month of underperformance. It needs another 3% rally to catch up with HDFC Bank. 350 crores of buying in State Bank of India yesterday, and the stock still about 6% off its 52-week highs. HDFC Bank itself, of course, that's been very strong. But let's see if it can go to 1650 thereabout, the 20 and 50-day moving average. And finally, Infosys, which has shown some signs of testing its 200-day moving average. Just giving you some numbers for Nifty and Bank Nifty today. The range for me is 19,339 to 19,421, and the bigger range is 19,280 to 19,520. If, however, you sustain 19,451, then the option sellers will have to cover their positions, and that could lead to a move about 19,500. On the Bank Nifty, the range I'm working with is 45,000 to 45,418, and slightly bigger range of 44,900 to 45,550.
Okay, all right, Anuj. Thanks a lot for that. Well, let's get in our technical experts. We have Mitesh Thakkar as well as Sudarshan Sukhani, who joins us on the show. Good morning, gentlemen. Mitesh, how do you read the index setup on the Nifty first? If you could give us a trade.
Yeah. Morning, Ajay. So I think on the Nifty, we've been maintaining targets of 19,450, 19,500. We've done that. We just kind of made a high of 19,434 on Tuesday, and yesterday high of 19,420. And we've advocated taking part positions off, suggesting that fresh entries now should be done on declines. The key support for me is around 19,200. There's a gap. There's also a short-term moving average, and the fact that it's the most basic retracement area. So I think closer to about 19,250 becomes your entry point with a stop below 19,180. And I think on the upside, there's a good chance that we'll eventually not only retest 19,450, but maybe surpass it and head towards 19,550, 600. So stay long, stay positive. But from a tactical point of view, after a rally of 6 days, this is not the entry point. So wait for some kind of a pullback. You might get it on an intraday basis or maybe on a one-day basis where you would want to buy closer to about 19,250. But trading with more of long buys. On stock side also, I think the strategy is very similar. We've taken part profits on some long positions and waiting for declines to enter.
Sudarshan, any Nifty trade that you would recommend?
Any Nifty trade would mean I didn't get that point.
No, is there a Nifty trade or a Nifty bank trade, according to you? If the markets open down about 40 points, as the GIFT Nifty is suggesting, is there an index trade?
See, the markets open 40, 50 points up or down is irrelevant to me. The market trend is much more important. It's like, on a cloudy day, the sun doesn't rise. That doesn't mean the sun will not rise for the next of the, 365 days. So my suggestion to viewers is to keep market opens at a very low key and look at the bigger picture. The bigger picture is very clear. The Nifty is in a strong uptrend. It is not breaking any support levels. It at the most consolidates and then renews its uptrend. That's what we must follow. In a strong uptrend, there is only one trade. Every day, you look to buy the Nifty. Even today, if you see a consolidation, and I expect that the markets to consolidate, on a sharp intraday dips, go long. Your stops are much more important. That's 19,200. So with the stops under 19,200, buy sharp intraday dips. Now, the same story does not repeat itself in the Nifty Bank. The Nifty Bank itself has gone into a huddle, into a consolidation, or even some kind of a minor correction. So again, focus on the Nifty and let the Nifty Bank be alone.
Okay, gentlemen, good morning. Mitesh, in terms of individual trades, what would you have?
Prashant, I have a mix of buys and sell calls today. So 2 buys and 2 sells, though I think our broad idea is to trade long, but I would want to add on the long position on stock once we get some kind of a decline. So for the time being, a buy on Bharat Forge with a stop at 840 for targets of 885, and a buy on Godrej Consumer with a stop at 1075 for targets of around 1145. On the sell side is Dixon after a good rally showing signs of pullback. So here sell with a stop at 43.20 for targets of 4,000, and Astral is a sell as well with a stop at 1901 for targets of 1,800.
Your stock picks? Sudarshan, your stock recommendations for the day?
Oh, I'm sorry. I didn't realize you were talking to me. PVR Inox is an intraday short, and the stock has a big decline and then a consolidation. That consolidation could actually be preparatory to another decline. So it's a intraday short with a stop above 1,400. Asian Paints is a buying opportunity. That stock has been having that classic bull market signals, higher highs, higher lows, consolidation, breakouts from consolidation on the upside. So buy Asian Paints with a stop under 3,300. Again, an intraday short is UPL. If you see the UPL charts, you will see very big declines and then a consolidation. And what I expect would be another decline post that consolidation. It's an intraday short with a stop above 685. And finally, Balkrishna Industries is a buying opportunity. That stock has not been having as steep a rally as some of the other ones, but it's going up. And now after a correction, it's resumed its uptrend. So buy with a stop under 2,300.
By the way, Asia is selling off. Hang Seng is now down 2.4%. When we started the show at 8 a.m., the Hang Seng index was down about 1%, 1.1%, but it's extended its fall. 2.4% gone on the Hang Seng, while the Taiwanese markets too lower by more than 1%. To get into a break, we'll come back with the pre-opening. We'll also be joined by Harshvardhan Dole, Vice President, Institutional Equities at IIFL. Welcome back. It's the weekly options expiry for the Nifty Bank. The GIFT Nifty suggesting a bit of a pullback, lower by 50 points, but we've had a record-breaking rally over the last couple of days. How should you position yourself on the F&O front? Sneha Seth, Derivatives Research Analyst in Angel One, is with us on the show now. Sneha, morning, and thanks for joining in. The recommendations, the trades on the index and individual stocks?
Hey, good morning, and thanks for having me over here. If we talk about index, we have seen some consolidation in yesterday's session, and after such a smart rally, what we have seen, especially after the breakout seen in banking index, such kind of consolidation is very much on the card. So I believe at present we may see some consolidation for a while, and traders should avoid aggressive bets in index and focus on individual counters. There we can see a better trading opportunity and a good risk reward as well.
And the stock picks, what's the setup looking like for trade?
Yeah, for individual counters, I'm liking UBL. If you see, this counter has recovered from 1370 level and gradually it has, shown us decent long formation. At present, 1525 is the hurdle, which I believe that will be surpassed. So I would suggest buying this counter during the open market hours, and the stop loss should be maintained around 1499 and the target will be around 1587. Apart from this, PSUs has been showing a decent move recently. So in PSUs, I'm liking like in the banking counters and PSUs, if you see, we have seen some consolidation and there is a breakout in a couple of counters. I'm liking Canara Bank in that, wherein if you see, this counter has rebounded from the 200-day simple moving average and is poised for the breakout above 325. So I believe we can buy this counter as well with a strict stop loss of 317 and the target will be around 334.
Okay, well, thanks very much for that. Good to get that perspective. Good to get those trades as well. Siddharth Khemka is still with us. Siddharth, thanks for waiting. By the way, we're getting the pre-open rates the first minute in, and they'll come up on your screen. 82.37 on the rupee as well as we open. It's weaker this morning. Now, Siddharth, the two names. One is Genus Power, if you have a view. Stock last 2 days has been flying. There's that marquee deal with GIC, which was announced day before yesterday. And then the other one, just want your thoughts on, is Dixon, which sold off a little bit. There was a Jefferies downgrade yesterday. The stock was down 4-5%. Your thoughts, Genus and Dixon?
Yeah, Prashant. So unfortunately, both the stocks, we don't have coverage right now. But I think, Genus, there was two news back to back. One was a large order that they got. And the second is the tie-up that they are done with GIC for the smart metering projects. I think the space is really exciting. And with the large order book and with a tie-up like that, I think the company is well poised. But unfortunately, we don't have coverage. So I don't have any view on the valuations or the stock price. Coming to Dixon, I think again another space which has been doing very well. We are seeing a lot of interest in this space where you have the suppliers, the electronic manufacturers to the OEMs. And on back of that, Dixon has been doing well. There has been a lot of stimulus in terms of the PLI schemes, a lot of global companies setting up base in India. So I think that space again looks exciting. A lot of new companies are getting listed in that space. We are getting Cyan DLM, which will get listed. That is another IPO that was coming up, which looked really interesting. Along with that, you had some of the defense names that are coming out with IPO. So we are having the listing of Idea Forge today. We had a very positive view on the IPO, and I think with a unique business model of making drones both for civil as well as defense, I think that company will also do well. And coming to the IPOs, I should definitely put a pat on the back for Mangalam and Nigel. I was hearing the interview they had with the management of PKH Ventures, where they were questioning them about the several related party transactions, the working capital requirement and the cash flows. A well-rounded interview, and definitely helps investors in this time of euphoria where a lot of IPOs gets hugely oversubscribed on back of the expectation of listing gains.
Indeed. Thanks for taking note of that. Said, me and Mangala made a genuine effort to do the best for the retail shareholders. So I'm glad you liked that interview. And at the end of it, when we wound it up as well, I recall telling the management that the stock market doesn't miss anything, and the stock market will, give every company the value that it deserves. But thanks so much for taking note of that, and thanks so much for joining in, today and giving us your view on a whole host of stocks. Well, time to focus on the oil and gas space, and Harshvardhana Dole, the Vice President, Institutional Equities, joins us on the show. Hi, Harsh. Good morning. Thanks so much for joining in. Well, the OMCs have been buzzing of late, right? What's your view on the stocks from here on? Obviously, there's a risk getting into an election year. But how are you, how are you viewing things from the OMCs?
Hi, good morning. So the way we see things, the macro environment for oil marketing companies has improved considerably. Our view on oil price is that while oil may not see a runaway increase, it may not fall substantially unless the global consumption deteriorates or worsens. So if oil remains anywhere between $70 and $75 per barrel, it's a Goldilocks situation for OMCs in general. And to that extent, we are forecasting record high profits in first quarter and a stellar performance in FY24. So much so that whatever net worth was eroded in FY23, more than that will get restored in FY24. And to that extent, we like OMCs over all other players in the sector. There's a peculiar element here. Surprisingly, the government has decided to pump in money in all the three OMCs. And that's the reason why you have IO and BP announcing rights issue. We'll have to see how HPCL takes ahead this particular fund mobilization. But in general, we like the OMC as an asset class, and we remain bullish.
So what happens to HPCL? There is no government holding there. So how do you think HPCL will go about raising their funds?
Well, while BP and IO have a direct government shareholding, and to that extent, your as well as my share, interest in terms of shareholding are protected. There is no dilution to my interest. I sincerely hope that my interest as a minority shareholder are protected, while HPCL is going to raise capital. And I actually don't have a direct answer to it. And I'm keeping my fingers crossed that, my interests are not, diluted. I'm sure the government will take care of it.
Harsh, sorry, what is your rating on all three names now?
So amongst the three, we like BPCL the most, followed by IOCL, and HPCL, what we have seen traditionally is these stocks move in packs. So, HPCL is typically the high beta, and therefore it gives the highest returns. BPCL, given the balanced portfolio that it has, gives returns which are in sync with, the sector. And IOCL, given the low beta, it typically lags their sectoral returns. But as a pack, we like all the three.
Okay, you like all three. Are you getting a lot of questions from investors around this rights issuance, the infusion?
So investors were first taken aback as to why the need to infuse capital. Because if you look at the history of all the three OMCs, at least since I've been tracking them for last, maybe 15 years or so, these companies have grown their businesses regardless of cycle without diluting equity. I mean, last year was perhaps the worst year in terms of their operations, but still they managed to keep their head above the water and they grow their business. So across the cycles, the return ratios, cash flows have been impeccable. And to that extent, investors are a bit surprised as to why raise capital at this particular juncture. And we'll have to see what the government as well as its respective managements have to offer in terms of these comments. Yes, we are getting a lot of inward queries, and that is quite reflected in their respective stock prices.
Okay, all right. By the way, in your assessment, will MRPL and Chennai Petro be eligible for some of these funds?
See, as far as our understanding is, it appears that the government is injecting money which was set aside during the budget. And the budgetary compensation was strictly towards, undertaking the energy transition projects. So if I were to corroborate that, this money was set aside only for the oil marketing companies.
Okay.
I'm not sure whether MRPL and CPCL are eligible for that, because in MRPL, there is no direct government holding. It is held through HPCL and MRPL, whereas in Chennai Petro, it's a 51% shareholding is owned by IOC. So even if the government were to inject, I'm not sure what mechanism will have to be triggered.
Okay, Harsh, we'll leave it there. Thank you very much for your time. Good speaking with you. And it's a pleasure, as always, having you here on CNBC. There's 6 minutes to go for market open. Let's just have the pre-open rates up quickly and take note of that. Nifty is down just 12 or 13 points at the end of the pre-open session. 9-10 calls. Mitesh is back with us. Mitesh, what do you have?
Yeah. Prashant, I'll go with the buy on Godrej Consumer with the stop at 1,075 for targets of 1140.
Sudarshan, your 9-10 call?
Asian Paints is a buying opportunity with a stop under 3,300.
Okay. You said that even earlier, so, fair amount of conviction on Asian Paints. Mitesh, Sudarshan, thank you very much for joining in. Let's now go across to Mangalam, who's going to tell us a little bit more about Marico. Mangalam, it looks like Marico is opening in the red. That's what pre-open suggests.
Yep, Marico is likely to open in the red largely because of the weakness that the company saw in their first quarter. In fact, just to talk about the company's outlook in terms of demand environment, they said that the signs of QOQ improvement were clearly not visible. In fact, the anticipated pickup in rural demand also remained elusive. However, they are hopeful of some pickup as the monsoons also pick up. For the company, domestic volumes grew in low single digit. They saw a minor volume drop in the Parachute coconut oil business. There was low double-digit volume growth in Saffola edible oil. But remember, over the last year, we've seen a decline in the prices. So value growth in Saffola edible oil may actually be lower. Flattish quarter for value-added hair oils. And also, we saw a strong run for its foods business that continued. And premium personal care was steady. Premium personal care also houses all the digital brands of the company. As a result of which, the consolidated revenue for the company in this quarter declined in low single digits. However, the silver linings are a couple. One, the expansion in operating margin will drive double-digit growth in the company's profitability. And the company said that primary volume growth in this quarter, while it was marred by one-time internal and external factors, they expect a visible pickup from the next quarter. So if the stock opens in the red, it will be interesting to see if there is some buying at the dips.
Glam, thanks a lot for that. Well, let's focus on Hindustan Zinc. Late last night, they've said that they're going to be considering interim dividend on July 8th. And the record for that they've mentioned as July 15th, if in case there is an interim dividend that is, announced. Now, in the last fiscal year, that's in FY23, they announced dividend numerous amount of times. And the total dividend that they announced in the last year itself was around 75 rupees and 50 paise, which amounted to more than 31,900 crores approximately. That was the total payout out there. Now, this time around, it's a little tricky because actually the borrowings are more than the cash in the books. Remember, Hindustan Zinc had a lot of cash in its books. But what's been happening over the last few months has been that they've been paying out cash and to their shareholders. And out of that, you have the largest shareholders out there, the Government of India, as well as Vedanta. And Vedanta Limited, in turn, has been paying it to their shareholders. But this time around, when they pay a dividend, well, they'll become more net debt, it seems like. So we'll have to see how this plays out. But for the time being, both Hindustan Zinc as well as Vedanta will be in focus for today's session for the next couple of sessions.
Well, I'm going to be tracking the two-wheelers yet again. Today, Kotak has downgraded Bajaj Auto to a sell from a reduced rating. They're saying the valuations are expensive for Bajaj Auto. The stock is trading at 18.5 times FY25 PE. Their target price is at 4,275. So it's a sharp downside from the current levels of 4,800, 4,900. They go on to say the stock has rallied 30% in the last 6 months. Most positives are priced in, and plus there is a risk of slower than expected recovery in the domestic and in the export market. But even as, Kotak is cautious about Bajaj Auto on account of expensive valuations, Morgan Stanley believes the valuations are fairly attractive. According to them, the stock is trading at 17 times forward multiple, which is lower than the 10-year median. And Jefferies also says that the stock is trading at 16 times forward multiple versus 17 times long-term average. So they think the valuations are reasonable. Let me quickly run through Eicher Motors. According to Kotak, Royal Enfield will have to cut the prices of its key products to defend its market share. They're now expecting Eicher's market share to come down from 90 to 75%. Therefore, EPS estimates get cut because volume assumptions have to be brought down, and there could be some impact on the margins of Eicher Motors if they do decide to cut prices. So they reiterate, Kotak reiterates their sell call on Eicher Motors, and their target price is at 2,720. So again, close to about a 15% downside from where the stock currently is. In pre-opening, Eicher is currently down 1.8%. Pre-opening, Eicher's down 1.8%. So it's extending the fall that it's seen over the last 2 days. Just a few seconds left before the markets open up for trade. It's expected to be another subdued opening. U.S. markets close lower. Asia is weak this morning. Across the board, Asian markets are down, more than 1.5%, and Hang Seng has extended its loss to a 3% cut. So Asia is firmly in the red, but the Indian markets, closed flat. Let's see what we can do today. The first stick on the Nifty is in the red. It's a cut, but not a whole lot. It's down 13, 15, 20 points on the Nifty, less than 0.1% gone in terms of a percentage point. So it's opened mildly lower. Mid-caps too flat, but holding their head above water. The key losers include Eicher Motors, 1.2%, Hero MotoCorp and Bajaj Auto see profit taking. So all the three two-wheelers are under pressure this morning. Commodities weak. Hindalco, Tata Steel down close to about 0.7, 0.8%. IT names are on the back foot. TCS, Infosys in the red. On the gaining side, it's the consumer names which have come back to life even yesterday. And today it's Britannia, which is the top Nifty gainer, 1.9% higher. Asian Paints, a stock that Sudarshan was recommending. Asian Paints has opened up in the green. You've got Tata Motors higher, Power Grid, M&M. In the auto pack is also up close to about 1% thereabout. But on the whole, a flat opening. Again, it's a minor marginal downtick.
Well, that's right, Rima. Let's focus on a couple of stocks in the broader markets. Marico is down close to around 2%. They've given their business updates. The primary volume growth was marred by one-time internal as well as external factors. So that's why that stock is down 1.5 to around 2%. So that's a bit of an underperformance today's trading session. Pull up Adani Wilmar as well. That as well came out with their business update, double-digit volume growth of around 25%. But the sales value in edible oils was down close to around 15%. For the time being, though, the stock is holding high with a gain of around 1%. We had quarterly updates coming in from Ujjivan as well as DCB, so both of them should come up for you. They look fairly good, actually. Fairly healthy is what we saw on both those two names. So Ujjivan is up. Ujjivan Small Finance Bank up close to around 3%, and DCB flying away up close to around 7%. Other stocks in news, Well, reports indicate that Bombay Dyeing may sell its Worli land parcel for around 5,000 crores approximately. The stock was up more than 10% yesterday, and today as well it's opened up with a gain of close to around 3.5%. And Force Motors, they came up with their monthly update, and on a year-on-year basis, it appeared a little bit disappointing. Production was down close to around 16% approximately, but that stock is moving one way. That's northward. So those are a few stocks, Prashant, that are reacting to the news this morning.
All right, so it's a quiet kind of a day on the index as the pre-open and the GIFT Nifty, etc. were indicating. But the action once again is in the broader market. Maybe a little quiet, but nothing to scoff at because, I mean, even this early, if you look at the market breadth, it is by far and greatly in favor of advances in terms of what we are seeing. Some 1,300 stocks are higher, 500 stocks are lower. This is, of course, I mean, just the opening rates that we are talking about. Just a few other names, before we move forward. Look at Piramal Enterprises. Stock is up about 1.8, 1.9%, and it'll be up on your screen. It's got large volumes. Bombay Dyeing, we highlighted huge volumes in this one. Look at Britannia, which is up 3%. Again, very large volumes for this time of the day. JSW Energy has been doing well, and today Tata Power is joining that list. Tata Power has got some 1.5% gains. Genus Power in the pre-open, I think, was indicating a 10% uptick. But it's not up 10, it's up 4 or 5%. So come off quite a bit. KEC is up 4%. We have the management of KEC joining us later on the program. Stocks, I think, at about 600, 593 or so. What else? DCB Bank, we highlighted stocks, a big gainer. IOC, we were just talking about oil marketing companies. Action Construction Equipment is another one which is coming up with a 4% pop. JSW Energy is there once again. Over the last couple of days, it has done very, very well. So that's the overall list of things which are moving around. iSure is down 1.5%. Bajaj Auto is down about 1% as well. And let's look at Hero as well. I mean, just complete the trio. Hero is down about 1.25%. Both Hero and more lately Bajaj have done well over the last day or two. iSure, of course, over the last 2 days lost about 10% or so. And today, all three are seeing some amount of pullbacks. But this is, very, very early in the session, just about opening.
Watch for Thyrocare as well, right? There is its owner, promoter, PharmEasy appears to be a bit in the woods right now. There are talks about some valuation cuts taking place, layoffs. So there is a lot of reportage taking place on PharmEasy. So keep your eye on Thyrocare. PharmEasy owns Thyrocare after they acquired the startup.
All right. Sridhar Shivaram is now joining us. He's investment director at Enam Holdings. Sridhar, great to have you with us here on the program. Thanks very much. It really has been a parabolic kind of a rise, right? 700 points in 6 sessions flat. What do you make of the pace, and what does it mean for future returns, near to medium term?
So I think we are participating as part of a global rally. You see most large markets, barring China, all are hitting new highs or very close to their new highs. So I think India is also participating. I would say if you look at the emerging market construct, India has actually slightly underperformed. We are up about, say, 5-6% dollar returns. Even large markets like Taiwan, Korea are up 15-16. Brazil is up, say, 14-15. The entire EMEA, the European markets are up 20-25%. So there is a broad rally that we are seeing in many markets. India is participating a bit late, I would say. But it's good. We are also moving along with a lot of them. But I would say that there has to be some caution because not everything is great, even globally. I think my concern would be more global than India, that we still have another 2 rate hikes possibly in the US. We'll have to see how that plays out, how interest rates higher for longer, how that plays out in the global markets. We'll have to see because we've been in a low interest rate environment for 15 years. How this plays out, I think, is anybody's guess.
We've been in a high interest rate environment for at least a year and a half, but that has not dampened enthusiasm, even for the one space where we thought what is typically called long duration stocks, right?
Yeah.
And AI is long duration. I mean, it's great and all of that, but it'll make money maybe in the future. And that is the one area which is booming with rates gone up 500 basis points in the last 1 year in the US. So
So actually, if you see the US markets, it's basically 7-8 stocks that have held the market. So I would actually say India looks far better, because if you look at India, the top 7-8 stocks haven't really done much. It's actually the next 20 that have actually taken the market up. If you see the broad private sector financials, if you add Reliance and SBI there, they have actually best market performed or underperformed. So to that extent, the Indian construct looks far better, that you have a broader rally, at least in the Nifty. Whereas in the US markets, if you remove the top 7-8 stocks, it's really nothing to show below that. And they do not have much to do with interest rates, I would want to believe. How it plays out from here on, if there is a slowdown in consumption, and how that plays out, only time will tell. Some of these stocks, especially the AI-related stocks, now reminding me of what happened in 2000 when you're trading at 40 times multiple of sales and stuff like that. We'll need to see how it plays out. There is a euphoria right now, and people are playing into it. I would want to wait and see what happens in the US markets, because that's going to determine how the Indian markets behave to a large extent, I would say.
So let's get into the micros. Sridhar, good morning. How do you see this battle of the bikes play out over the next 5 years? And which stock would you include in your portfolio?
See, I'll not get into stock specific, but broadly I would say, looking at, say, India's two-wheeler numbers for, say, last 10 years, you'll see that the overall number hasn't done much. We've had maybe 2% growth CAGR for 10 years. So it's a very saturated market as far as two-wheelers concerned. What we are seeing is a K-shaped recovery in the last 2 years, where 125 and below are struggling. And if you see above that, say maybe 150 plus are doing well. I think that will continue, and how the market share moves there, time will say. But I think it's going to be tough to displace some of the existing large players there. But there will be challenges. I mean, that's how I'll put it. I think the opportunity to a large extent is in the higher end. And I think at the lower end, what is happening is that even the EVs are disrupting. So the early EVs will come, or we are already seeing, some of these moped type two-wheelers floating around in the suburbs. They're disrupting the 100cc more than the higher end. So that's how I would look at it. It's a space worth watching.
So you would still be circumspect, cautious on the mass market.
If at all you have to play at the higher end. And that goes for almost everything in the, I would say, to a large extent in the auto space, that the higher end seems to be doing well and the lower end is struggling.
It's the case everywhere, right? It's the, the rural, the mass market, the lower entry points struggling, while at the top end, everything luxury is adding on more muscle.
So the K-shaped, classic K-shaped recovery is happening, which is again, coming back to the point that one has to be very careful in what we are owning right now, because there is every data point that we get, companies that we speak, there is slowdown in consumption, but a higher end is doing well.
All right, Sridhar, always good hearing your thoughts. Sridhar, given the kind of challenges that we have ahead, uncertainty on the Fed, there's likely to be a couple of more rate hikes. And it seems as of now, equity markets, they're just chilling. They're ignoring all the bad news, but pricing all the good news. Incremental money, how would you look at it? You've always told us that gold, some part of your portfolio, 10-15% of your portfolio. So incremental money from here on, how it should be allocated? A lot of people would be looking out for advice out there between bonds, between equities, and say gold as well.
So I think within equities, I think all of us have some mistakes somewhere, some stocks we would have bought at the wrong time, but they're all doing well right now. I would say this is the best time to clean up your portfolio. Some of the exits that you can get now, you may never be able to get. And there's always this FOMO of if I sell, what will I buy? I think first you have to get over that. Cash is king. So first do the right thing, which is clean up the portfolio. This is the best time possible. I would say, if nothing, look at what's happening in the fixed deposit space. I wouldn't have thought that I'll say this, but banks are offering extremely very good rates in the short term, because of the merger of one bank, and there is deposit, people are scrambling for deposit. So you're getting very good short-term deposit rates. If nothing, just park there for 6 months and see how things play out. I'm not saying sell entire equity. There are pockets where you see, irrational exuberance. it's worth looking at some of those and wait for 6 months and see how things play out. These are not constructs for great bull markets. You have interest rates going up in the US. Our own interest rates, if at all, they may not go up. They're not going to be cut at least for the next, say, at least 9 to 12 months. And we have an election coming up. And so there are a lot of question marks and uncertainties. It's better not to get into all this with a very aggressive portfolio. Be very sure on what you're owning, be sure on the earnings, and see how it plays out. It's not like, I'm not bearish on the Indian markets over the medium term, but in the short term, I'm really not very sure whether we have too much of upside.
So raising some money, cleaning up the portfolio may not be such a bad idea.
Exactly.
I just wanted to ask you about one such theme which we have discussed in the past,
Sure.
insurance space.
Yeah.
I think you've been a little bit cautious on that space. Some of these stocks, after getting hit, they are bounced back in style. Do you maintain your cautious view out there?
Yeah. So I still maintain. So if you take a medium-term outlook of insurance, or if you just take the last 5 years, these stocks have done nothing. From a cyclical low, they have actually bounced back very smartly. I'm not an expert on buying the bottom and selling the top. Structurally, if I look at life insurance as a space, I know that they still have at least for a person 5 lakhs for a normal insurance and 2 lakhs for 2.5 lakhs for ULIP. That's almost 7.5 lakhs of tax-free product that is still available. And I know that mutual funds are, going to the finance ministry every time saying that it is not apples to apples. You're giving them tax-free options. You're not giving us. So either mutual funds will get tax-free options or insurance will lose tax-free. If you ask me to guess, I think we know what the right answer is, that insurance will eventually lose all their tax-free options. Question is, what happens after that? And that's my big challenge, that the industry is not selling enough protection. Protection is hardly 10%. You're still selling savings. So that's my big question mark. So if you ask me within the entire financial savings space, would I want to chase insurance? I think the asset managers are looking far better. Despite all the challenges that they have in terms of the TER and other issues, I think that space is looking far better if I want to play the savings space than the insurance space. That's how I'll put it.
Got it. Give us a few themes where there is still a fair bit of runway of growth, more structural kind of themes where there is some valuation comfort. AMCs perhaps is one, as you said. What else?
So I would say I'll give you a structural theme. Whether there's valuation comfort or not is something we'll have to see how it plays out. But I think India as a manufacturing hub is surely is reaching there. I mean, we're meeting companies every day and we hear that more and more companies want to manufacture in India, whether it's China plus one or irrespective of that. We heard some company telling us that Apple's ambition is to export 100 billion from India in the next 2-3 years. They're not even 10. I mean, if that were to happen, most of them are in the unlisted space. The entire ecosystem is going to bust. So maybe the EMS is a space which has to be watched. They're very small right now. Market cap of companies are 8,000-9,000 crores. No big companies there, but they're all growing at 30-40%. Stocks have done very well in the entire space. But I think that's a space worth watching, which is the entire manufacturing space. I think India's coming of age as far as manufacturing. We've been hearing this thing that, India's potential of manufacturing. I think finally I'm seeing, on the ground, things really shaping up where companies are really, getting large orders. Some of them may be in the unlisted space. So we may not
actually,
see
the
that.
entire ecosystem, when we talk about Apple, right, the most visible company, all of it is unlisted, right? I mean, as of now, there's nothing which...
But what happens is if Apple has an aspiration of 100 billion exports, the others will follow suit, the entire ecosystem. So initially, maybe the value add may be 15%, 20%. But eventually, the value add will keep adding because the ecosystem will keep getting added in India. I think that's a space worth watching. So EMS is a space.
But valuations are okay, Sridhar? For the
as
viewers
of now,
watching,
they're not. As of now, they are not.
You wait for pullbacks.
So you have to keep a watch on them. Market always gives. So if you go back to March, we had a very sharp correction. Many of these were available at in their teens. Now they're in the 40s in terms of valuation. So I think you always get opportunity. So you have to be prepared as to these are the opportunities I want to look at. And you get opportunities. I think in every I would say 12 months, you get 2 or 3 good days to buy. So you have to be sure on that day what exactly I want to buy and how I want to build my portfolio. So if you get it, great. If you not, you wait for some other stock. So that's how I would put it.
Sridhar, great conversation, and thank you very much for coming to the studio. We've got a corporate waiting by to chat with us. Chemicals maker Anupam Rasayan has signed an MOU with 3Xper Innoventure, a subsidiary of Tube Investments, for the supply of targeted and identified new age pharma molecules. In June, the company also signed a letter of intent for a 2,100 crore deal with a Japanese specialty company for the supply of new age patented life science active ingredient for the next 5 years. To discuss this and more, we're joined by Vishal Thakkar, Deputy CFO at Anupam Rasayan. Vishal, morning, and thanks for joining in. You've entered into a lot of agreements and LOIs, but let me start with the latest one, with the subsidiary of Tube Investments. Right now, it's an MOU. When do you think you will finalize this agreement, and what are the terms? What will be the investment required from you? What is your expected revenue share?
So, okay. Thank you first for getting us on your channel. In terms of timelines, if you look at it, we have signed the MOU. We are working on the product development with them. We have identified a list of products that we would be looking at. The total TAM for this product should be around about $1 billion of total targeted addressable market that we can look at. These will be import substitution products. We would look at these products to be manufactured in India, which have not been manufactured in the country, and supply to India and to worldwide. That's how we have been doing our business earlier also, that we have been kept manufacturing products which are practically not manufactured in the country, and we supply to India and the worldwide as well. So that's the focus will continue. We'll use our our expertise of our process development and process optimization, along with our continuous chemistry, which is a very, very interesting one, and which we have developed over the last 10 years, which we'll be using it here. And we will use the Mr. Govind's experience here coming from the pharma industry that will help us expand our pharma portfolio to a larger extent. And we believe that this should give us a very, very strong growth going forward.
You're saying the total addressable market for the MOU is 1 billion, but what could your share be? What are the assessments, the assumptions that you have made when you signed this?
So I think there is a reasonable size, if you can see. Right now it's an early stage to give you exact data in terms of size and quantity and amounts and all, because it's little too early and too premature to make that statement. But this will be a very, very good growth. The pharma contribution into my revenue will be reasonably high as we go further.
Could you give us some numbers, Vishal? Where would it be?
I would tend to refrain from giving you the numbers for now. At some time later, we should be able to share that with you.
In June, you also signed an LOI with a Japanese company. Has that LOI been converted to an agreement?
So, as you know, that the LOIs take their own little bit of a time to convert into an agreement. But when we sign this LOI, practically all the kind of numbers, all the kind of broad, in terms of volume, price, timelines are finally, firmed up here. So to that extent, there is a very strong visibility that you can see with this revenue or this LOI. We expect that the total quantum of the LOI is around about over 2,100 crores over the 5 years period that we have been envisaging this product to be coming in from.
But will it be converted into an agreement this year, say this calendar year?
So yeah, that's the plan, that we would always look to convert that into a contract, and the timelines are looking in the range that typically we have been doing. So there is nothing that should be in the range that we talked about, right? Historically, it is 6 to 12 months. Typically, you should look at 12 plus something months here, right? So that's where we should be.
Will any of this be converted into revenues this year?
So the last one that we talked about, that should start generating revenue from calendar year 25.
Calendar 25. And could you talk about, I mean, in next financial year, what would this be in terms of Okay, you're talking about the Japanese contract, the Japanese
Exactly.
LOI. That okay, all right. That will start fructifying in calendar 2025.
Yes, yes.
Okay. Could you talk to us about how demand is in Europe specifically? Is the so-called Europe plus one theme playing out? How much of a sort of demand kicker is that? Some of the European chemical companies, for example, over the last 2 or 3 weeks have lowered their own guidance for revenues. So things are not going very well there. Just talk to us about the impact and what you're seeing here.
So, sorry. Here, if you look at the kind of LOIs that we have signed and the kind of demand that we are seeing, I think the long-term view is looking robust. 3 to 5 year time period, the kind of demand that we would expect is coming through. In fact, we are a beneficiary of the Europe plus one, China plus one, and the kind of efforts that we have put in over the last 5-7 years is really translating into demand as well. Even if you look at the guidance that if you can see for the year, we think that we should be able to continue the revenue growth rate that we have been seeing historically.
Does it ever happen that the LOI doesn't get converted into a contract? Is there a risk of that?
Typically, you don't see that risk because of a very simple reason. These are all very, very large immense multinational companies. Because when they sign the LOI, they would really have to run through the whole system. And so the risk of that is hardly anything there now.
About 60% of your revenues comes in from exports. What's the order pipeline? What's the growth, export revenue growth that you're anticipating this year?
So as we had guided historically also, the growth trajectory for the year looks similar as we had said. The demand is fairly robust. I think that's where I would say I'm in a silent period, so I would not want to comment more on this for the now at least.
Okay, Vishal, we'll leave it there. Good speaking with you. Thank you very much for joining us and running us through all of that detail and some commentary on outlook as well. We'll take a quick commercial break here with news that the market's now flatlined. Just 1.5 point change. We are at just under 19,400. Next up, we'll be joined by the management of Godrej Consumer Products to discuss the first quarter 24 business update. We'll talk about the outlook for the rest of the year. And after that, we'll have the management of KEC International to discuss the company's recent order win worth about 1,042 crore rupees. So stay tuned. Both those conversations coming up.
Welcome back. Well, the markets are holding as flat as can be as we speak. We have opened higher, then we went into the red, but now, in fact, holding more or less on the flattish line. Well, let's focus on our next corporate, Godrej Consumer. Their Q1 FY24 update came in. That indicated that sales growth has been in double digits in the first quarter of FY24. That's on a consolidated basis. They also see sales growth to be in double digits. To discuss this and more on their international business, we are joined by Sameer Shah, the CFO at the company. Hi, Sameer. Good morning. Thanks so much for joining in. Well, let's focus on the India piece first. How has growth been across the various segments? Soaps, liquid soaps, hair color, as well as household insecticides. Could you tell us which segment has grown faster? And also, will India's revenue grow ahead of volumes?
Good morning, Nigel, and thanks for having me on the show. If you look at our performance in India last quarter, it has been quite steady. I mean, to begin with, we had double-digit volume growth. And the growth was also very broad-based between home care and personal care. In fact, home care growth was even better. It was somewhere around mid-teens in terms of volumes, and personal care volumes growth was higher than mid-single digits. The overall value growth was tad lower. That's because we are passing on the benefits of lower commodity prices, especially in categories like personal wash to the end consumers, which is resulting in lower pricing. But net-net, the overall quarter performance was extremely steady to strong for us.
And will the revenue grow ahead of volumes? Getting back to that earlier question, Sameer. And also, if you could throw light on the rural demand, what have you seen in the last 3 months and your expectations going ahead?
So at this point in time, we expect the volumes growth for us to be ahead of value growth for the simple reason that we have taken price cuts in categories like personal wash, which is also driving market share gains and strong volumes growth for us. My sense is towards the end of the year, this will anniversarize, and hence the value volume growth should start, merging in. I think for us, the rural demand was steady. Honestly, we may not be the best proxy for rural demand because our rural salience is around 27-28% compared to FMCG universe, which is around 35 to 40%. And the overall FMCG did get impacted because of untimely rains. But for us, the performance was steady, I would say, though urban did much better than rural for us too.
Samir, hi, morning. So you're saying that by the end of FY24, value growth should start to outpace volume growth.
It will start merging around. It will start merging, and then my sense is there will be pricing mix-led growth, which should result in value growth ahead of volumes growth.
Okay. What was the contribution of Raymond consumer business? There was some 6 to 7 weeks of consolidation for the quarter.
Yeah, so the growth which I mentioned earlier in India, the double-digit volume growth is all organic. I think Raymond's contribution would be maybe around 3 to 4% in the quarter to India business, and would be around 1.5% to 2% to the overall global business for us.
Okay, all right. Samir, your gross margins, they will likely see an expansion, right? Input costs have gone down. How much of that will be reinvested in ad spends? If you could give us a rough number, how much ad spends are as a percentage of sales in the last year? And will you be looking to up that because now your gross margins will be higher?
Yeah, so gross margins have seen significant expansion, and we are quite pleased with the quality of profits, which is gross margin expansion, increase in media investments, which in turn drives strong volume growth, lower controllable cost, and healthy profitability. So gross margins, my senses, will see anywhere between 800 to 1,000 bips of expansion on a YOY basis. We also had a relatively low marketing spends in the base quarter, but we will, kind of see again meaningful increase in marketing spends. My senses it will be close to around 10 to 11% as a percentage of sales. And with lower controllable cost, we still expect very healthy EBITDA growth. And not just this quarter, but my senses, Nigel, even for rest of the year, we will continue to see this kind of trajectory, direction-wise at least, healthy gross margins, higher marketing investments, lower controllable cost. And by the way, we are also investing part of gross margins towards price drops, especially in personal wash category, which is again driving good market share gains and volumes for us.
You're saying gross margins in Q1 are 800 to 1,000 basis points higher on a year-on-year basis?
Yes, that's right.
Okay. And going ahead in Q2, do you think directionally gross margins can be higher than what they are in Q1? And you spoke about using that leverage to cut prices. Where else are we likely to see a drop in prices going ahead?
Yeah, so I think gross margins on a YOY basis, Rima, will continue to expand. I'm not sure on sequential basis because in FMCG there is always a little bit of seasonality, so there will be a mixed impact over there. But we will continue to see, even for rest of the year, we remain extremely confident that we will see gross margin expansion and a meaningful one. And we will continue to invest for growth because we do want, this to be like a flywheel where you have gross margins expansion, you invest for growth, you get volumes, you get scale, you have lower cost and healthy profitability. So that's the model which we are working with. I think so far so good in terms of Q1 as well as Q2 looks like. And hopefully we will be able to replicate this for rest of the year also.
Samir, some of the African markets have been in a bit of an upheaval, political-led, and then, of course, the economic impact, Nigeria, etc., especially. How do you see, those markets panning out for you? Those are big markets for you for the rest of the year, FY24?
Yeah, so I think again to begin with, Prashant, if you look at Q1, Indonesia has done extremely well, though on a low base. We did have mid-teens constant currency growth rates and good profitability. Again, we expect that trend to continue for rest of the year. Africa also, did see low teens constant currency sales growth and with adverse translation impact, high single-digit value growth. Nigeria is around 5-6% to our global business. We did see a sharp currency devaluation. There are multiple impacts. The first is translation, which is a non-cash impact. So that doesn't impact, the cash flows as such. The second is inflationary impact because the cost of purchase will go up, but we remain extremely confident in terms of mitigating it by either passing it to the end consumers or reducing down the overall controllable cost to continue with our ambition of Africa as a region reaching to 13-14% EBITDA margins in FY24. The third is actually it creates, I mean, a competitive landscape for us because there were a lot of players in the earlier regime who were able to get dollars at much lower rates as compared to most of the organized players like us. And now in the new regime, I mean, there is a significant competitive advantage. So we do expect significant market share gains also because all the players will be in the same boat in terms of cost of purchase going ahead.
Samir, give and take everything. For the year, what kind of numbers are you looking at in terms of a volume growth, revenues, margins? If you could give us a rough sense for the year. You're in silent period, so don't ask you anything about quarter one. But for the year, what kind of a target do you have?
So Nigel, we had, shared recently in our strategy discussion with market participants a full year guidance, which was for high single digits volume growth and high teens EBITDA growth. I think we're very much on track in terms of high single digits volume growth, the way things are at this point in time for rest of the year and hence for FY24. My sense is on profitability, maybe we'll do better than high teens EBITDA growth, should be close to around 19-20%. Again, the way things are at this point in time.
I know for you, rural market is not as big as it is for other FMCG players, but if you could just provide some industry color. Has rural demand in Q1 been weaker than what we had in the March quarter?
So again, not sequentially, but in terms of trends, Rima, the rural demand has been, kind of softer. We did see a little bit of spurt somewhere around the Diwali period, but post that, rural consumption has been, sluggish. We expect gradual recovery, but the recovery has been extremely gradual. It's getting pushed, honestly, by few, months and maybe a quarter or so almost, over last 6 odd months. But now, assuming that monsoon is, kind of fairly decent and also in run up to elections, if we are going to see, which typically happens, higher social welfare spendings, there should be increase in rural consumption. And also, by the way, it will be on a weaker base. So net for rest of the year, even for FMCG, we do expect gradual recovery in rural. And then it gets complemented by steady state performance in urban. So in fact, kind of CRISIL reported, I think yesterday or today, that they are looking at higher than mid-single digit value growth for FMCG in FY24. And we do, believe that for the sector, to clock higher than mid-single digit value growth for FY24 should not be that difficult either.
Okay, Samir, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. Good luck to you as we look forward into the rest of F524. The market, by the way, is flitting between being flat to slightly higher. We're up about 15 or 16 points at 19,413. Well, infrastructure major KEC International and RPG Group companies received new orders worth 1,042 crore rupees across its various businesses. These orders were from railways, transmission and distribution, and the cable segment. Vimal Kejriwal is Managing Director and CEO of KEC International, and he's joining us right now. Mr. Kejriwal, good morning. Great to have you with us here. Prashant this side. First of all, I don't know if I should congratulate you because it's a reflection of the business. The stock is done so well, and I'm assuming that the investors are smiling year to year. And I believe this latest order, 1,050 odd crores, is the first one in the second quarter of F524. Which takes up the total order inflow in F524 so far to a little over 10,000 crores or so. How is the momentum building up, sir, as you look into the rest of Q2? What will the overall numbers look like?
So, morning, Prashant. And yes, our share price did touch a lifetime high today. So, as far as these orders are concerned, we are roughly around 50% higher than last year at the quarter, same time to same time. These are typically, I'll not say Q2 orders. They were, orders which were in the making in Q1 and they have been received now. So technically, I'll still call them, Q1 orders. Last year, we got around 22,000 crores of orders. And this year, we have been talking about getting at least, 25,000 crores or so. And as you said, they are across various sectors. But I'll say very broadly, they are equally divided between transmission, railways and civil. And a little bit of that comes from cables. That's a broad way.
All right. Hi, Mr. Kejriwal. Good morning. For me, this order wins. The biggest part for me is your railways win and your foray into the international markets as well. Because you've been talking about this and now suddenly we're seeing some orders coming in. So if you could tell us what is the opportunity and scope for improvement from this business?
So morning, Nigel. So we have been talking for some time saying we want to go international both in railways and in civil. And so this is the first breakthrough which we have got in Railways, which is our signaling and telecommunication order. And we do expect some more orders. You know, we are bidding for some projects in Middle East as well as in Africa. So we do hope that something else should mature. More than railways, I think civil should mature more now on the international market. So till today, our international revenue is roughly around 30%, all of it from T&D. Now we do expect that, you know, a part of it will start coming in from railways as well as civil.
So what could be the contribution of the non-T&D export revenue?
Right now it is zero. Okay.
I know, but going ahead.
Right now it's
given
zero.
The order wins.
Yeah, I think it's today, if you look at it, maybe a percent or two, because I don't see, because this is the first order which we have got, and civil, you expect some orders to come in, but I don't see too much of revenue sort of, you know, flowing in this year. So this year, if you can do 1%, I think we will be happy on non-T&D in the international market.
So what's the order book, the updated order book now with these wins?
Our order book right now is around 30,500 and odd, and we are L1 in another 5,000, another L1 in another 5,000. So roughly, I'll say 35,500.
Since you spoke about civil being the more exciting of the two opportunities between railways and civil, I mean, this order, this component that you announced was from a steel company in India, right?
Yes, yes.
You're more excited about the international civil opportunity because we are hearing so many new projects coming up here in India as well.
No, the volumes will definitely be driven by India. Since Nigel asked me about the international foray, that's why I said that we are also going to get a few orders, hopefully in the civil piece also. But clearly the volume driver will be India. And if you look at the civil piece, to us there are 3 or 4 drivers, I'll say. One is clearly the residential piece is looking very good on the real estate side. Slowly we are seeing commercial picking up, commercial real estate. So we have got a few orders there now. Data centers is doing well. And finally, we are seeing some light in the industrial piece, the private capex. This order has come in. We are bidding for some PLI related orders. We are also bidding for 1 or 2 FMCG. After a long time, we are seeing some inquiries coming in for expansion in the FMCG sector. So I think the industrial piece has slowly started picking up also in the civil piece.
Okay, all right. Mr. Kejriwal, what was the total quantum that you had to get from Afghanistan? I think the operations out there, you had got some amount in Q4 and I think in Q1 as well. So what was due? How much has been received? And when do you receive the remaining amount?
So, Nigel, gross amount was around 600 and odd. Then there were liabilities against it, which are back to back. So net amount payable, receivable would be around 300, 350 crores. So we have till now received 200 crores. A part of it will get paid to contractors, etc., who had a back-to-back. Rest would come to in. We do expect that the balance amount, which should come in by the end of December, the calendar years. That's what we have been talking and maintaining, and we have been in touch with the lenders to these projects, and we are quite hopeful that will happen.
So that's around 150 crores odd.
On a net basis, I think it's 200 crores or 200 crores or so, somewhere.
All right. All right, Mr. Kejriwal, I also understand that there is a bit of shortage in the pipes business, in India itself. And I think the Jal Jeevan Mission, that's picking up steam and you have some exposure out there as well. Could you tell us how things are shaping up? Is there a shortage?
There is a clear shortage. Okay, in fact, what is happening is it's not just water, even in transmission, etc., other places we are suddenly seeing with the boom which is happening, even items like conductors, transformers. So pipes, definitely the DI pipes are in a big shortage because suddenly many of the state governments have given large orders, and because of that there's a sudden demand on the pipe supplies. So we are also facing a bit of a crunch on that.
So what does this mean then for the business, Mr. Kejriwal?
So see, what will happen is that when I say shortage, instead of getting it in Q2 in 2 months, you'll get it in 4 months. So the revenue for the year would remain where it is, but there may be some impact on the quarterly piece. So something which would have come in Q1 may go in Q2 or they'll go in Q3. That's all. I'm not seeing this as a long-term shortage, but it just impacts some quarterly numbers here and there, but does not impact the overall numbers what we have been talking.
So 20,000 crores in FY24. I mean that stays.
Yeah, roughly. Yeah.
And margins on an overall blended basis about 7%?
Yeah, that's what we had said, that around 6% in the H1 and 8% roughly in H2, so it should be around 7%.
Okay, I think that's it for now. Mr. Kejriwal, thank you very much. Congratulations once again for what's been an absolutely stellar performance, and of course expectations that the business is going to do well. Markets rewarding that with the share at a new high. That's KC International for you. Well, we got the market, which is looking good, 17 points or so higher. Market breadth is positive. 1450 stocks are higher, 600 stocks are lower. The big mover, Genus Power, is huge volumes, but the stocks climbed down quite a bit. It's up just about 1.5%. It'll come up on your screen. Electra Green Tech, that's the name which is buzzing this morning. That's the other one which has got a huge volume, 7% higher, 1,060 on Electra. These oil marketing companies, I can spot IOC at least, and I think there was another one in the morning which was looking up. DCB Bank is up about 5%, and you've got Action Construction, which is up about 9% as well. I saw a large move in Radico, about a 6-7% move, but that has also cooled off. Radico is just up about 3% right now. So some movers. Mitesh is with us with a quick look at the last 45 minutes of trade. And Mitesh, morning again. What would you recommend?
So I think, you were just talking about oil refineries, Prashant. I have IOC as one of the recommendations. Open gap up and seeing good follow through. So buy here with the stop at 96 or just 5 paisa, 10 paisa below it, and a target of 105 can be looked at. And the other one is Havells, which on an intraday basis is giving a good reversal. So here I would recommend buying with a stop below 1295 for targets of 1350.
Any thoughts on Britannia or Nestle? FMCG has been doing well. For the last 2 days, it was Colgate. But today, it's Britannia and Nestle flying away.
In fact, Britannia was one of the stocks which I considered for giving a trading call. I think, again, a very good pattern, getting into fresh highs with the gap up opening, a very positive setup. The stop loss slightly deep for me. That's around 51.15, so about 100 points lower. That's why I think I avoided. But otherwise, if somebody's holding, that's the stop loss, and 5,500 could be the trading target.
All right, Mitesh, the verdict out there is split whether Eicher Motors will face the heat from Harley and from the Triumph that's being launched. But technically, I mean, how are the charts looking? The stock today tried to pull back a little bit, but from the top again, it's got sold into. Technically, are there any levels that you're looking at?
Najit, so I think the first day when this Harley's news came in, I think I was looking at a target of around 33.70, which was the 200 average. And now that we have broken below that, the stock still remains under pressure and weak setup is there on the chart. So I'm looking at a target of around 31.1020, which is where the stock had made some bottoms in the month of December of 22. In the worst case scenario, I think we could even test 2,900, and that's a good possibility on the chart. So I think the stock technically remains weak and should see lower levels.
Okay, by the way, any thoughts, Mitesh, on Radico, which has been doing very well the last couple of days?
Yes, Prashant. In fact, it's been on the watch list. It's given a very good breakout around levels of 1225. It's done the target of 1400. In fact, it's trading right now just around those levels of 1400. But I think eventually we are looking at a much higher target purely because of the fact that this breakout has happened after about a year and a half. So last time we seen the stock peak around 1250 was in the month of January 22. Now we are seeing a fresh swing high above that. So I think position targets would be closer to about 1550, 1600. So people who have a position view can hold on. Trading point of view, 1400 was one pivot. You could see a few days of consolidation and mild profit over here.
Okay, well, Mitesh, thanks very much for that. Appreciate you joining in and good speaking with you. We'll take a quick commercial break here. Up next, we put the focus on a whole host of stocks which are buzzing in trade. Stay tuned. All of that coming up.